All right, before I start this video, I want to make sure that I put out a disclaimer here. This video is going to be talking about tax rates and the tax rates that are changing. I am not a legal expert or a tax agent, and you should not take this advice as a legal advice or a tax advice or tax planning advice. This is just a general discussion about tax rates and how it's going to impact you next year. And you should take this advice as a general advice. Okay, with that into consideration, let's just get into this video. In this video, this is very exciting video. In this video, we will be talking about tax rates. Now, as you know that Australian government has been working on the tax rates, and the tax rates are changing next year. And there are some exciting changes that are happening and taking place. So I want to share some exciting news with you. The tax rates are going down. So if you're planning your finances, you will be getting really good saving. So let's get into this video. When you go to Google, you want to write Australian tax rates 2024. 2024, 25 is the year next year when you will be able to access these savings. Now, what are the tax rates that are going to be in place next year? Now, I want to show you this table. Look at the current tax rates. So current tax rates, if you're not familiar with the tax rates, you should know in Australia, the current tax rates are, these are the thresholds and brackets for tax rates, 0 to 18,200, that's tax-free. So anyone earning between 0 to 18,200 pays no tax at all in Australia. But when it goes above 18,200, you have to pay 19% tax, which is going to be reduced to 16% next year. Okay, and it will take place from 1st of July, right? Down from 19% to 16%. In the bracket from 45,000 to 120,000, you were paying currently 32.5%. That will be 30% now. So that's a great saving of 2.5%. Now the bracket from 45,000 to 120,000 is also changing. It is expanding. So if you earn up to 135,000, your tax rate is going to remain at 30%. It's not going to be 37%. So in other words, between 120,000 to 130,000, you currently would pay 37%, but you will be paying 30%. Now, you would be paying 37% still from 135,000 to 190,000. So the bracket has gone up as well from 180,000 previously or currently. It will be changing next year to 190,000. So till 190,000, if your income is up to 190,000, you will be paying 37% rather than 180,000, and above 190,000 the tax remains at 45%. All right, so above 190 there is no change. Now, how this will impact you, let me show you some tables. So if you go to this table, and all the links I will be putting in the description of this video. So if you look at this table, it talks about, why this tax cuts are being put in place by the Australian government. They want to help people with the cost of living. As you know, the cost of living has increased significantly after COVID, and people are really struggling with cost of living. The government wants to help you guys out. So from 1st of July this year, the government will reduce the 19% tax rate to 16%. They will reduce 32% tax rate down to 30%, and they will increase the tax threshold above which is 37% tax rate applies from 120,000 to 135,000, and they will increase the tax threshold above which is 45% tax rate applies to 180,000. Now it will apply from 190,000. They say that, let me make it a little bit bigger. They say that about 13.6 million Australian taxpayers will receive a tax cut from 2024 to 25 onwards. A person on average wage. So average wage in Australia, if you want to understand what the average rate in Australia is, it's about 73,000. A person earns about 73,000 per year. They will get a tax saving or tax cut of about $1,504. Now, there are few scenarios you can look at here. Four examples that have been given here. If your income is, let's say, 45,000 per year, you will be getting a tax cut of to $804, which you will save essentially next year. If your income is 75,000, your saving will be 1,554. And if your income is 100,000, your saving will be 2,179. If your income is 150,000, your saving will be 3,729. Okay, so we have an example here. Let's look at Matthew and Alice. Matthew and Alice have two kids and are working full-time. Matthew is a truck driver and Alice is a primary school teacher. In 2024, Matthew expects to earn 80,000 and Alice expects to earn 90,000. So we're talking about a couple, and their family income will receive a combined tax rate or tax cut of $3,608. Okay. Let's look at these examples. We have few more examples. So let's look at individual examples. We talked about the couples examples. Let's talk about individual examples here. We've got an example of Emma. Emma is working part-time as a shop assistant after deciding to increase her hours in 2024. She earns 30,000. So she was earning less, but now she's earning 30,000 under current tax rates and thresholds. Emma would have paid $1,942 in income tax in 2024. However, she will now receive a tax cut of $354. How amazing. In addition to this tax cut, Emma will also benefit by $172 from the increase to Medicare levy low income threshold. So they're also increasing the Medicare levy low income thresholds as well. And I will make a separate video on that. Now let's look at another example. Priya is a registered nurse who lives in regional Australia. She earns 90,000 and paid 21,517 income tax in this year, 2023-24. On the same salary, if she had the same salary, nothing changed to have salary next year, Priya will get a tax cut of 1,929 in 2025. How amazing. That's great saving. Actually, she can buy a ticket to wherever she wants to for that saving, right? So you can see this table also gives you an idea, that tax rate is, we already talked about it. It's going from 19% to 16%, 32% previously is going to 30%, 37%. It remains the same, but the threshold bracket increases from 120 to, 180 to 190, and above 190, 180 previously you were paying 45%, but now above 190 you will be paying 45%. So that's a great saving. Now, if you want to look at this table, and I will be putting the link in the description of this video, these are some of the income. So you can look at your income, your current income, and what you're trying to make next year. You can see what are your tax cuts or what are your tax savings, right? So look at this one, for example. It starts with 30,000. You will be saving about 354. Let's say your income is 80,000. Your tax saving will be 1,679 because you will be paying only 16,388 as opposed to $18,067, right? If your income, and let me mention this, if your income is 180,000, you will still be saving 3,729. If your income is 190, let's say you have two jobs or you just have a high paying job of 190, you will be saving the maximum tax cut saving that you will get. that is 4,529. Above 190, whoever is earning more than 190, their saving will remain the same. They will still get the saving, but their saving will not change. It will still be anything above 190. It will still remain 4,529. So you don't actually make additional savings if your income is more than 190. That's what it means. So you can review this table and look at your example and your specific income here. Now let's talk about spouse income. So if you have dual income and you're looking at the family income, household income, let's say your spouse is earning 30,000 and you're earning 30,000, your saving will be, it will just double, right? It will be $708. Let's say your spouse is making 80,000 and you're making 80,000, your combined income is 160,000. Then you get a saving of 3,378, 58. Let's say your income is 95,000 and your spouse income is the same 95,000. Your combined income is 190,000. Your saving will be $4,108. Okay, so your maximum saving, as you can see, you both can make the maximum saving if you both earn 190,000 and your household, so your partner also makes 190, your maximum saving will be $9,058 because you both will be getting the same maximum saving. Above that, you don't really get any additional savings. So you can look at that example. Now let's look at an example where different partners make different amount of money. For example, you make higher than your partner, or your partner makes higher than you, spouse one. Let's say you make $40,200 and your partner makes $19,800. Your combined saving will be $660. Let's look at a mid income example. Let's say you make $80,400 and your partner makes $39,600. Your combined saving, it will be $2,301. And let's look at the maximum example. So here we have, let's say you're making about 200K and your partner is making 100K. Your combined income, let's say your combined income is 300,000. Your saving, because of this tax cut next year, is going to be 6,708. Okay. So just to give you an example, I'll be putting the link of this table in the description as discussed. All right, I also want to mention that there is a calculator for tax savings. So you would be able to enter your income for next year or estimate for next year, and you will be able to see your tax savings. Okay, so let me share that. And I will be putting a link in the description so you can go to this tax cut calculator and you can put in your income. For example, your income is 123,000. You hit go and you get your tax savings. So this is how much you will pay compared to this year, how much you're going to pay, how much you will save next year. And there is a slider here as well, so it's pretty neat. You can just slide and see what your saving is. Let's say your income is 86,400. Your saving is going to be 183,000. Let's say your income is, let's say, 56,700. Your saving will be $1,097. Let's say your maximum income is like 190, and we said that the maximum is going to be 190,000. You can see that's the maximum saving one can get. That's 4,529. Beyond that, there's no additional tax savings. So just remember that. And it does give you a comparison as well as this year. With the current tax rates, you will be paying $65,000 to $65,325 current year. But next year, if you had the same income, you will be paying, if you had more than $190,000, you will be paying $60,796. So as you can see, next year, the government has done a really good job. Next year is the time to make a little bit more money because there is an incentive for you to work a little bit harder, and this saving is going to help you with your with your cost of living. I hope this video was helpful and motivational, and will help you to plan your finances in a better way. Okay, so I will see you in the next one. Thanks for listening. Take care. Bye.